Ladies and gentlemen, good day and welcome to the Eldeco Housing and Industry Limited Q4 and FY24 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. And I've handed the conference over to Mr. Abhishek Bhatt from EY Investor Relations. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, for joining us on the call. Before we proceed to the call, let me remind you that today's discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with the business risks that could cause future results, performance, or argument to differ significantly from what is expressed and implied by such forward-looking statements. Please note, the results and presentation are available on the exchanges and our company's website. Should you need any assistance to receive that, you can write to us. We'll be happy to send them over. Today we have on the call Senior Management of Eldeco Housing and Industries Limited, which is represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, Mr. Sanjay Agarwal, Group President, Accounts and Taxation. We'll begin with the highlights of the quarter, followed by Q&A. Now, I would like to hand over the call to Mr. Pankaj Bajaj for his opening remarks. Over to you, sir.
Thank you, Abhishek. Good afternoon, everyone. Happy to have you all at our earnings call for Q4 and FY24 to discuss the company's performance. So the residential real estate sector in Lucknow remains robust with a clear shift towards premium properties and a market consolidation that favors larger and well-known developers. These trends are gaining traction in the city, mirroring broader industry movements. FY24 has been a standout year for our company with significant milestones achieved. During the year, we have reported all-time high area booked, land acquisition and booking value, reaching the highest levels in our history. This performance reflects our company's growing strength in the market and is a result of years of consistent work. Now, moving on to operational highlights for the period under review, I would like to highlight the stellar growth we have achieved during Q4 and FY24. During the quarter, our construction payments have seen a growth rising to 34.7 crores from 22.9 crores in the Q4 of FY23. It is the area booked which has experienced a remarkable surge, rising from approximately 50,000 square feet in Q4 23 to an all-time high of 4.6 lakh square feet approximately in Q4 24. This growth is primarily due to the successful sale of 275 units in Imperia Phase 2. We were in fact able to sell out almost the entire inventory at Imperia 2 within a couple of weeks of launch. The booking value for the quarter was also at an all-time high of about rupees 250 crores compared to rupees 25 crores in Q4 FY23. This was again largely driven by the successful launch of Imperia Phase 2. On an annual basis, our construction expenditures stood at rupees 97 crores with an year-over-year growth of 12%. The area booked for the year was 7.8 lakh square feet approximately with a value of rupees 388 crores. Both the numbers are the highest in the company's history. Another area where we had a good year was land acquisition. We acquired approximately 61 acres of land across 3 different sites in Lucknow, where we continue to aggregate more land. We anticipate launching at least 2 of these projects in the fiscal year 24-25. Moreover, we are preparing for the debut of our luxury development, Eldeco Trinity, which will be launched in the first quarter of FY25. With these upcoming projects, we aim to meet or surpass the historic sales figures set in FY24. Moving on to our financial performance, the consolidated revenue from operations was rupees 49.2 crores in Q4 FY24 compared with rupees 38.7 crores in Q4 FY23. During the financial year 24, the revenue stood at rupees 112.7 crores compared to rupees 129.1 crores in FY23. The company's consolidated profit after tax stood at rupees 11.7 crores in Q4 FY24 as compared to 14.9 crores in Q4 FY23. During the financial year 24, the PAT, profit after tax, was rupees 33.9 crores compared to rupees 44.4 crores in FY23. Additionally, for the financial year 24, the board has recommended a final dividend of rupees 8 per equity share, which is the same as last year. With this, I would like to open the floor for questions if there are any. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bharat Gupta from Fair Value Capital. Please go ahead.
Hi, Pankaj. I'm Nishi. First of all, congratulations for the successful launch of Imperia Phase 2. Sir, a couple of questions from my side. So, in your previous con calls, you have been highlighting that the land availability continues to remain a key challenge in Lucknow. So, if I talk about the long-term view, like from 3 to 5 years, how are we ensuring that the growth trajectory remains on a buoyant side? And are we also exploring land acquisitions in the newer regions if the Lucknow market continues to remain under threat?
So, good question. You've been following the company. So, I'm happy to report. I've reported in my opening remarks also. We have been able to break that logjam. And we've been able to acquire fresh projects in Lucknow. These are 3 different locations. We're not disclosing the locations within Lucknow right now because further aggregation is going on. We have in fact received preliminary approvals in one of them already. And in another one, we are applying for approvals, I think, in a couple of days. So the issue of pipeline has been resolved. So I'm very happy to report. With these acquisitions, I think it will approximately add about 1,000 crores to our gross developable value in the next 3-4 years. So, and we're looking for more, there are some more deals in the pipeline. So I don't think that's a very burning issue right now. It was an issue for a couple of years, but with our efforts on this front, we've been able to break this problem.
Right. And the recent land acquisitions, that pertains only to Lucknow market, not to other markets which we were, I think, discussing earlier.
Yeah, because we were not able to get our hands on proper developable land parcels, but we have finally been able to do that. So at the moment, we are focusing on Lucknow because we think that being the capital of the most populous state and undergoing a significant infrastructure transformation, Lucknow is well poised to be the next city which, makes the transformation to a big urban space, just like Pune and Bangalore. So we don't want to get distracted right now when we are going deeper into Lucknow at the moment.
Right, sir. Sir, also with demand outpacing supplies and because of the infra boom which is happening across the Lucknow market. So, in terms of the industry side, so if we look about what kind of inventory levels can the industry surface based on the current demand trends, and what kind of a demand supply mismatch is there in the Lucknow market as of now?
I don't have exact numbers on the demand side because nobody has those numbers. A lot of demand in real estate tends to be latent. It tends to be hidden. So it surfaces only if you give them a good product, otherwise it will remain hidden for a long time. So at the moment, whatever you supply, because the supply is so constrained, whatever you supply is getting lapped up. So I told you about our Imperia launch. It got lapped up in a matter of a couple of weeks. But if we had 2 more Imperias or 3 more Imperias, even they would get lapped up. That's the kind of demand there is, not only in Lucknow, but in many cities across the country right now. So demand is not something, demand supply mismatch is not something we're worried about at the moment. That's not a constraint. The constraint is on the supply side, how you get the developable parcels of land at reasonable prices so that you can deliver a reasonable product to the market. And I'm happy to report that, with the 60-acre of acquisition across 3 parcels and with the upcoming launch of Trinity, I think that issue is also solved for the next couple of years, at least for the company.
Sure, sir. Sir, last question from my side. So is there any kind of a vertical development projects other than Trinity which is there in the pipeline for us? And how does the realization vary between a horizontal and a vertical development in Lucknow?
So we are just finishing Twin Tower project, which is a small project. This is a 10 or 12 story development and a small one. Latitude 27 is another group housing project. Total area is about 4.5 lakh square feet. Trinity is 5 lakh square feet. And we have a few other they are mentioned in our investor presentation. There's something called GH4, we like Group Housing 4. So we are going to be submitting that for approvals. And with the upturn in the market, even in the new acquisitions, we might have some group housing component. So we will have a significant amount of group housing because the market is maturing very fast. In terms of realization, it is more or less the same per square foot wise, group housing and horizontal. So if you look at we've disclosed that number. Earlier we used to be historically per square foot realization would be around 3,000-3,200 rupees a square foot. Then the last couple of years it inched up to about 4,500 rupees a square foot. But this last quarter it has been the highest in terms of per square foot realization. I think it is 5,500 rupees a square foot. So that's the highest ever. That's another metric on which we achieve the highest ever number.
Right, sir. And going forward with Trinity being there, which will be coming in FY25, so the realization trend should be in the upward trajectory only, right?
Trinity is definitely a much higher price product. I would not say it will probably get sold at the same pace at which the lower price products get sold, but it is definitely a product which gives us good margin. It's a luxury product. Luxury is gaining traction all over the country. It's good for our brand. So it's a launch that we're looking forward to with the expectation. But you're right that the per square foot realization in Trinity would be much higher.
Right, sir. That's it from my side, sir. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Priyam Prodar from Value Equity. Please go ahead.
So, hello.
Yes, Priyam, go ahead.
Thanks. Thanks for taking my question. So this is just a bit of extending your previous participant's question and your reply. So as mentioned, as you can clearly see, this is with regards to the realization. Okay. As you have mentioned that we have attained 5,500 plus average realization during the last quarter, which seemed to be highest in the last 5 quarters. So just wanted to understand that would we be able to maintain such kind of realization on an average basis in the coming years? So if we also check it out, that we have been growing our average realization by 8%, like comparing the FY24 to FY23. So can we maintain that trend?
It's very difficult to predict markets. It also depends on the kind of product mix you have. So a couple of projects could be at a lower per square foot realization. Like I think one of the new parcels would be at about 3,500 or 4,000. But then the major ones are all at 5,000 plus. And Trinity is much higher. So on a weighted average basis, I think this does seem to be the new normal, and I think if the market keeps supporting us, then it may increase on an annual basis also. So difficult to say, but 5,500 does seem to be the new normal.
That's really nice to hear. And secondly, what would be the aspirational revenues that we wish to be in the zone? Like, you can share any range, that would be great. But any aspirational top line that you are garnering for, that you are targeting for FY 25, 26?
And we're always very conservative in giving guidance. So last year also, I didn't put a number to it except saying that it would be much better than the previous year. And here in my opening remarks, I concluded by saying that I would like to, the historic numbers that we achieved last year, we would definitely want to surpass that this year. Beyond that, it all depends on when we get the approvals, when we are able to launch the project. So, for example, if the 3 new acquisitions we have made, if they all hit the launch phase within this financial year, then definitely we are going to increase our booking number this year. But approvals do take time, and that's why I was slightly conservative, and I said that, I hope to launch at least 2 of these 3. And with 2 of these 3, along with Trinity and Latitude 27, I think we should be able to surpass the number we achieved last year. And again, I hope this is a new normal for the company. So 388 crores is the highest ever number. Earlier, our highest was 250. So I don't want to go below what we have already achieved. This is the high water mark, and we should only increase from it. And we have the number of projects to be able to do it. Whether we will be able to do it this year, FY25, we hope we quickly get the approvals. It does take time, but if we are able to get approvals by, say, Diwali, then our number will be much higher this year. So I'll have more clarity in the next Concall.
Okay, we'll wait for the more clarification, sir. And thank you so much for your detailed reply.
Thank you.
Wish you all the best, sir. Thank you. Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Priyank Gupta from Guardian Advisors. Please go ahead.
Good afternoon, everyone. Congratulations to the whole team for an excellent quarter. We have been waiting for this day probably to see that this logjam gets broken, and it's very heartening to see that. The small question I have is, we have got all the comments on the realization. Would we be able to sustain the margins which we have been having for last few years? If you can comment on that. Thank you.
So this question has come a lot because our margins are much higher than the industry. And in almost every call, I've been answering about margins. So historically, our margins have been in the region of 40%. That does look like a very abnormally high margin to sustain. I always said that, I do expect it to come down a little bit. I think 30% would be more like it. And of late, it has come down to 30%. But definitely, I would not like, I don't see it falling below 30%. In a few projects, it could be a little higher also. So 30 to 40, depending on what product mix gets recognized in a particular quarter. This particular quarter has been bad in terms of margins because of the kind of projects which got recognized for revenue. So, but generally, 30 is something I can safely say we will be able to maintain.
Thank you very much, and best wishes to the whole team. Thank you.
Thank you, Frank.
Thank you. The next question is from the line of Aryan Sharma from Infinity Group. Please go ahead.
Yeah. Hi, sir. So my question is regarding the Lucknow market. How do you see the demand compared to last year, and what is the outlook on this market?
So I don't see where this, still to assess where the demand is, what the actual depth of the demand is, because there's not enough supply. I would know that what the demand is once we supply the market with enough stuff. I don't think the market is getting supplied with enough stuff, so it's not selling. So I think in a year about 3,000 to 4,000 units get sold in Lucknow. But I think the market can take much more if there was enough supply for that. So demand is not something that I'm worried about for Lucknow for many years now. And it's in the kind of stage that maybe an Ahmedabad was 10 years ago, or Bangalore was 20 years ago, or Hyderabad was. So it is one of the new generation cities which is going to see explosive growth in the next 10 to 15 years. And I think the market size is also going to really increase in Lucknow. So the kind of Eldeco is a leading developer of Lucknow, and these numbers will look nothing, I think, 5 years or 10 years down the line when we look back. So I don't think the size of the market is a constraint. Where exactly that number is right now, the total population is about 3.5 million. Now, why are we selling only 3,500 houses there? Why are we not selling 20,000? I think just because they're not getting supplied. Otherwise, there is demand for it.
Okay. Noted, sir. Thank you. Thank you. All the best. That's from my side.
Thank you. The next question is from the line of Varun Gupta, an individual investor. Please go ahead.
Hello. Good afternoon, sir. Thanks for the opportunity. I have one question on this Lucknow market. Like Eldeco Housing is having a very good balance sheet, but the company is restricted to Lucknow market only. So is there any plan to go in other markets, because the parent company is there in the Gurgaon market also, which is a hotspot market in India right now. So is there any plan to have a partnership agreement with the parent company where we can tap the other booming market?
So it has been clarified many times, and I'll clarify once again that the Eldeco Group has two companies. One is the listed company Eldeco Housing, which works in Lucknow, and the other is the unlisted company. The unlisted company, EIPL, Eldeco Infrastructure, which works in the rest of the country, is not the parent company of Eldeco Housing. They are entirely separate companies. They share the common brand. I, of course, happen to be the promoter of both the companies, and I make sure that the two companies do not compete with each other by interest agreement between the companies, that geographically they're not going to compete with each other, so that there's no conflict of interest at all. The moment we start, Eldeco Housing starts going out of Lucknow, then the conflict of interest question will start coming in. So as of now, we are keeping it separate. There was a temptation for Eldeco Housing to move out of Lucknow when we were not getting enough projects in Lucknow and cash was getting accumulated on the balance sheet. But as I said that in the last year, we've been able to solve that problem and tie up more projects in Lucknow. And there are even more projects in the pipeline. So that issue is solved for the moment. But at the same time, I have maintained that being restricted in Lucknow at the moment, Eldeco Housing, we should not, the company should not suffer for that. So if it is not getting enough opportunity, that's a discussion that we can have. But at the moment, it's not a relevant discussion because the pipeline is very strong in Lucknow for the next year or 2 years. But when the time comes, and if it is necessitated, we will look at going out. But of course, we'll have to have some kind of arrangement with the sister company whenever that happens.
My question is like in Lucknow, the average realization price is 5,500. But in cities like Gurgaon, Mumbai, where the big developers are there from India, like DLF, Oberoi Realty, the average selling price nowadays is 30,000, 40,000. So I think the opportunity is very big, and currently the real estate industry is booming. So do you think it is the right time to tap the metro cities also apart from Lucknow? Because Lucknow, I know, you have explained it's a untapped market. There is a lot of opportunity. But if you see the balance sheet strength of the Eldeco Housing, the leverage is just hardly any leverage in the balance sheet. So we can basically use this opportunity, and we can use this time currently where the real estate industry is booming and there is a demand in metro cities and also in smaller cities. So that's why I just want to highlight.
Thank you. Your point is taken. I think I've already answered the question. Thank you.
Okay, sir. Thank you. Thanks for your answer.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rohit, an individual investor. Please go ahead.
Well, thank you for the opportunity and phenomenal set of numbers. And I've been invested for a while now, and I'm also quite optimistic about the prospects of the company in Lucknow. So my question is a little different. So I am curious to know, you have a sister entity which is quite larger, and you have this entity focused on in Lucknow. So what was the rationale for listing this entity? Because it looks like we are pretty self-funded, given the strength of the brand and in the city in particular, and the balance sheet is super strong. So what is the rationale for us remaining listed? And I'm just curious to know your thoughts on a more long-term strategic basis for this company in particular.
Your line is not clear, Rohit. You'll have to either repeat it and keep it short. I couldn't get much of your question.
Sure. So my question is, what was the historic rationale for this company to be listed, particularly given it doesn't look like we have much capital requirements? So the long-term strategic intent for you with relation to this company, given you have a larger company, a sister company.
Well, I have a confession to make. There was hardly any strategic intent when it went public in 1985. So I don't think anybody saw 40 years into the future. And the company went public in 1985 and it raised a grand total of 50 lakh rupees. Right? And then there was a rights issue in 1989, it raised another 50 lakh rupees. So that 1 crore market raise has now risen to 1,000 crore. I think shareholders should be and would be happy with that, coupled with the fact that it has not skipped the dividend in 40 years. So I think as far as market friendliness goes, we've done great. But the fact remains that yes, it has been self-contained and has not raised a lot of external capital over the years. But we are now growing the company. For the first time, we have taken some loan last year and we deployed it for these new land acquisitions which we have disclosed. We had taken the loans earlier and that question had come, why are you taking loans now? And we said that we are doing it for fresh land acquisition, which we have disclosed now. So yes, in 1985, we did not realize, I'm sure the management then would not have realized that, you will be questioned 40 years later why you listed. But now that we are listed, we are trying to run it as shareholder friendly a manner as possible. We've always given dividends, we've given bonus issues, we are trying to be transparent with how we run it. There has been historically an unlisted company which has worked outside Lucknow and the listed company works in Lucknow. They do not tread on each other's path and it is very clear. It is not that it's off late something has happened. It is very clear. All shareholders of Eldeco Housing know that this company works in Lucknow and takes growth opportunities in Lucknow. Though we have, in the interest of our shareholders and in the interest of the company, we have always said that if being in Lucknow becomes a constraint for the company, we will have a discussion with the unlisted company to, tap opportunities outside. But that situation is not there today. As I said, that we have so much pipeline at the moment in Eldeco Housing that, if we just execute that over the next 4 or 5 years, we are going to beat a record every year. That's the kind of pipeline we have at the moment.
No. This is super helpful to hear. I was not aware of the 40-year history, and it's very, very helpful to hear your, the history that you've shared. I don't have any doubts. I've always enjoyed your calls because your capital allocation and counter-cyclical approach is refreshing to see in an industry like this. It was just purely my curiosity to hear your thoughts because, it's strange to see what you see right now, and I wanted to hear your thoughts on taking this company private also. How do you think about that?
In fact, it has been suggested a number of times to just delist the company and take it private. But we feel why deprive shareholders of this growth that they've been loyal with us. Many people, I am told, have been held the shares for 30 years. And it's almost like they have bought the share at 10 rupees. And today the share is at, I think it's at 1,000 rupees or something. And that's after a 1:4:5 split. So practically it's a 5,000 rupee share. 10 rupees historically he bought the share at 10 rupees. He's getting 8 rupees dividend. He's nearly So a lot of people, they come to me, the shareholders come to me, they said never delisted. This is our family. So I feel that, but if it makes sense for everybody, we will look at that also. But right now, these are things which we have parked on the side. At the moment, we are just focused on capitalizing on this historic opportunity that is there in India of urbanization.